Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsb@kaizencpas.com. Now let's get started.
Welcome, everyone, to Kaizen Time, part of the Blood, Sweat, and Business podcast. I'm joined here with Pierre, one of our managers here at Kaizen. Welcome.
Thanks for having me.
Let's get right into it. This time of the year, October, November, December, is a big time for businesses as they prepare for next year. They have all these types of structures, LLC, S Corp, C Corp. Is this a time to be transitioning between them?
Sure.
And why would they transition?
Great question. I like to recap what each one of those entities are.
Sure.
A C Corp is the general corporation that you hear most companies have. And we're going to talk about the tax reasons and not the liability reasons for transitioning between those two, because that could have other implications too. But we're talking just about the taxes here. But go ahead.
One thing I want to ask before we even get into it, is there a reason like, hey, I start my business, I have to be this specific type right out of the gate? Like, is there a certain qualification? Break that down for me, or is this just like I'm going to choose whatever I want because this one seems to be a better fit?
Yep.
What's the rule?
So really, it does have to be a good fit for you. You can do your business and be a sole proprietorship your whole career and be fine, but not everybody likes to do that. You want to have some protection, and that's why people incorporate. And there are different reasons to do it. If you are going to incorporate and then sell your business on the market, on the stock market eventually, then you have to be a C Corp. And you're going to always want to be a C Corp, and you're not going to be an S Corp, you're not going to be an LLC. But generally, most people are not starting their business to do that, okay? So for us, C Corporation is where all S Corporations start. You have to establish a C Corp, and then you elect to become an S Corp. So that's one thing there, too. So we're talking C Corporation versus S Corporation versus LLC versus single-member LLC is one other type of entity that we generally have out there. You do have sole proprietorship where you don't incorporate at all. But if we talk about these big three, generally the C Corporation files its own tax return, pays at the corporate tax rate of 21%. If you take any money out of that company other than salary, you're going to get double taxation. So that's why people don't like that one so much. Whereas an S Corp, you pay the income tax on the income, and then any dividends you take out, as long as you have basis, you don't pay any additional tax on that money. So that's the big difference between a C Corp and an S Corp. The S Corp does file its own tax return, but it pays it on your personal 1040.
Okay.
All right. Then an LLC is a lot like the S Corp. It files its own tax return, but it passes through to your personal return, and you pay it on your personal tax return. The difference between the two really is the income. If you participate in an LLC, you're going to be subject to self-employment tax on those earnings. And an S Corp isn't, only on the payroll that you pay.
Okay. But if you're just a small business, 1-2 people, LLC is a better option. It offers more protection though, doesn't it?
So it is, but then you can't pay yourself payroll. So say your company's going to make $100,000
as an LLC.
Okay. If you make $100,000 in LLC, it passes through to your personal return. You pay tax on that $100,000. You are also going to pay self-employment tax on that $100,000. Self-employment tax is the employee and the employer portion of the payroll taxes. So as a LLC, you'll have to pay that on those earnings. If you are an S Corp, you can give yourself a salary and pay the payroll tax only on your salary portion. So salary, what is that? It's fair and reasonable compensation. So we have in our mind we're going to make $100,000, but to run this company, we'd probably pay somebody $50,000 to manage it.
Okay.
So we give you wages of $50,000, and the rest you take out as dividends. And so you pay income tax on both, in both scenarios. But on this one, we don't pay payroll tax on half of it. That's some significant savings.
And then what do you do with the other half? You reinvest it. That goes into equipment. It goes into...
You can do whatever, but once it goes through the income of the tax return, you can take that money out as a dividend, and there's no more tax on it. If the company needs money, you can loan it back so that the company can go buy some equipment rather than go into the bank, or you can do whatever you want with that money.
So, Pierre, why don't I ask you, give me some examples of someone who wants to switch? Like, what's a good fit?
So a lot of times people establish themselves as an LLC because that's what their neighbor did or their landscaper did or somebody else who started a business
Somebody
did the
told them
same
it was a
thing.
good
Somebody
idea.
told them it's a good thing. It has the most protection. Oftentimes lawyers say it gives you the most protection because they can protect you by only being able to attack the dividends that you would distribute. So if you've never distributed any dividends, there's nothing for somebody to claim against. And that's generally the reason there.
So let's say you're, I don't know, a plumber.
Mhm.
You go into a house and now it floods for whatever reason, something that you did, or they blame you.
Yeah.
As an LLC, you're more protected. You're not going to be losing your house. Your family's not going to be out on the streets.
So I always say, again, this is legal work, and I don't have a license to practice law,
right.
but generally that's why you do it. But the LLC and the S Corp should give you similar protections, okay? Without getting into the total legal part of it. And I always say, if you go out and shoot somebody, the LLC or the S Corp aren't going to protect you. That's not what we're talking about.
You should be calling a lawyer.
You should be calling a lawyer.
Be calling an accountant.
But to protect it in that entity, it should be only subject to what that entity can give you. And that's why a lawyer will say, well, if we don't give any distributions, they can't take anything else because it's a partnership.
Okay.
So, but at that time, if you start out the first year and you don't make any money because we're buying equipment and we're learning stuff and we don't have as many jobs, we can stay as an LLC the first year because we don't have any self-employment tax that we're going to be subject to. At the end of the year, we came out, our net income zero. There's no self-employment tax. There's no reason to switch to S Corp.
Okay.
But next year, we hire another person. We're doubling our sales. We're making some good money this year.
So you all of a sudden you have employees, right? As an LLC.
LLC and S Corp, no difference employee except for you, the owner. You're really not supposed to pay yourself a W-2 wage in an LLC as the owner. Everybody else, you can have all kinds of employees. You could have employees if you were sole proprietorship.
You could subcontract out too.
You could subcontract out too,
You could have some people under your payroll per se.
So really I'm talking about that now your company's growing bigger. First year we know we're a loss. So last year we had a loss. We stayed in LLC. This year your company's making $100,000.
Okay.
All right. Well, let's talk about that. If we file you as an LLC this year, we're going to be subject to self-employment tax on that $100,000. Self-employment tax, to make the math easy for us today here, is roughly 15%. It's 7.265 for both 625 for both employer and employee. There's your 15%. So $100,000 times 15% is $15,000. But if we can give you a wage and make an S Corp election, then we only pay the 15% on your wages, which we established in October, November, December for this year. Okay. And then we take the rest out as dividend and we don't pay payroll tax on it. So say we did 50-50. Say we give you a salary of $50,000.
Okay. Same
$100,000. You'd be saving $7,500 just by making that election.
Sounds like a good deal.
Yeah,
but
pretty good.
With everything, it can't be all rainbows and butterflies, right? Is there a downfall then for that switch?
So the downfall is you need to pay yourself payroll. You can stop in a year that you don't have payroll. You still are an LLC, so it should give you that protection that the lawyers like, but you're electing to pay tax as an S corporation.
Yeah. So that's the big difference, that electing the taxing.
Yep.
Okay. Now let's move on. What is a situation where they'd want to move to, C Corp?
So generally you don't move to C Corp. You have to be a C Corp. But if you are an S Corp and you break one of the rules, you could get kicked out and back into C Corp status. And breaking one of the rules is having more shareholders than you're allowed to have, having a foreign shareholder, a couple other rules that could get you to lose your S Corp election.
Well, before we get into that, let me kind of back up. What are some transitions that you can make? You can go LLC to S Corp, no problem.
Yep.
Okay. You can go LLC to C Corp.
You can if you destroy your S Corp election.
Okay.
Yeah, and generally people don't want to do that. Okay. But a reason you would be if you want to go public.
Okay.
And you have to go public from a C corporation. You don't go public from an S corporation.
So basically it's very rare that these people are making that transition.
Yeah, you're not going to go backwards.
You want to be a C Corp. That's like a planned thing. People just don't automatically like, well, I'm going to pick a C Corp. That seems like a good
It's not
option.
A spin the wheel. Pick and choose, yeah.
And this goes into that strategy, right? Like you don't just make these choices willy-nilly.
Right? Correct. But oftentimes people already have made the choice. And so sometimes we've said, well, you don't want that. Let's close that and start a new one.
So let's get into that. Okay, they're a C corp, and they're like, oh man, this is not great because it sounds like C corp, you can't back out of it.
No, C corp, you can become an S corp.
Okay.
You can make the election to be tax exempt. All S corps start as a C corp.
Okay.
So you can always go that way. You just can't go backwards.
Okay, so they're S corp. Let's say they're like, oh, this really isn't working out for me, or they want to try something else. What path do they want to take?
So again, the reason why they want to get out is probably part of your discussion. If, say, they messed up their payroll taxes, and they won, they're
is
like,
this common? I just want to.
It has happened. Payroll
has
taxes they will come after you because you have a fiduciary responsibility to protect those withholdings that you took out of your employees' wages.
Okay.
So payroll taxes, they come after you very quickly and they're very harsh. So if you thought you've messed that up and you want to close the company, that's where you might stop doing what you're doing in that business and create a new business.
Okay,
it's not something we want to happen very often.
This is not ideal.
Yeah, it's not ideal.
And not all these situations are under great circumstances.
No, but it is very common to go from an LLC. Like I said, when you have no income, you say you have no income for the first 2 years because you're establishing your business. Stay as the LLC. There's no income.
There's nothing
no self-employment
wrong
tax
with doing it, right?
Yep.
It's just, hey, this is where we're being. And if, let's say it's just a part-time gig, right? They have their normal job and they're just doing side work as an LLC. That may be fine for a decade.
Yeah.
Until they're ready to really get serious, or they're actually starting to pull in those 6-digit numbers, right?
Yeah. Then you want to make the decision because jumping out of those numbers, you can save 15%. That's a pretty good savings.
So what is a number? If a client came to you today, Pierre, and said, hey, I'm an LLC right now, at what number would you say, it's probably where you want to make this transition?
So I don't know if it's a number so much as,
a projection?
okay, we're going to start making money. We need to pay you wages so you can have regular income, and then we'll take some dividends at the end of the day. If you're an LLC and you're kind of up and down and all over the place,
Like a seasonal thing?
you might stay that until we get some regularity so that then you could decide, okay, let's keep your wages at fair and reasonable compensation, and the rest comes out as dividends.
Why don't I ask you this? What are some very common LLCs? Like, what are the ones that, like, LLCs really work well for these industries?
That's a great question because LLCs, our favorite, are owners of property.
Okay.
Because of the definition of passive activity and you don't have to participate in it, you're not subject to self-employment tax when you own a building.
Okay.
So we love having the LLC own a building.
Okay.
Not only because it's passive activity and you usually don't have material participation, so there's no self-employment tax, but if you want to distribute that building out of an LLC, it's a little easier than if you distribute it out of an S corp. So if you own a building in an S corp and you own a building in an LLC, you can distribute that building from the LLC very easily. Okay. If you distribute it from the S corp, you have to distribute it at fair market value. Tax consequence from this one.
And those are big consequences.
So it can be because buildings go up as we see anything that you maybe picked up in 2008 is now worth probably twice what it was back then.
Yep.
So if you have non-material participation entities, LLC, material participation where you actually do the work, like as an accountant, I'm doing accounting work. I can't say I don't materially participate because I'm here every day working.
You're physically doing it, yes.
Then you can start as an LLC and then make the S corp election so I can harvest those brackets of self-employment tax versus regular wages versus dividends.
Okay. So getting back to what I was saying, give me some examples. Like, hey, this industry just caters perfectly to an LLC.
So a lot of people, that's why I mentioned landscapers.
Yep.
They want that liability because they're afraid that the building's going to slide down off the retaining wall that they did or whatever crazy scenario you can think of. Become an LLC, but then once you start making money, elect to be taxed as an S corp. So really, LLCs, I only like them as rental properties.
Okay.
To stay there. A rental property does not need to be an S corp because then if you're going to sell, so say your LLC has 2 buildings.
Okay.
If you want to get rid of one, you're going to have a big gain. Whereas you can move the LLC into 2 other entities very easily.
Okay.
So to recap.
Yeah, please.
S corps for operating entities where you're going to have people and employees, including yourself.
And in a building, right?
But you can start it as an LLC to
where
give you that legal protection.
They can be driving around.
Yep.
And that actually makes sense, specifically for like landscapers. Contractors make a great or
Mhm.
make a lot of sense too, because they don't necessarily need to be in a building. A lot of times they're in a vehicle
Yep.
transporting things. They have their tools. That's really the only thing they need to
Sure.
be worried about. And then they're going into other people's properties to physically do the work.
Yeah.
They're not in a factory, or even an example is like a bakery where they actually have to stay on the property doing the physical work.
So the best scenario that we talk about in your example, if you do own a bakery,
Mhm.
we would want that bakery building
Mhm.
in a separate LLC,
Mhm.
and you operating as the baker as an S corp. It could also start as an LLC, but then you make the S corp election so you can pay wages, and then the building is just a rental property.
Oh, okay.
So
you
you
can
own
actually
both.
You can break it up. in
And
many
one of the
ways.
reasons we like breaking up, if something happens to one of your bakers,
Mhm.
they can't always attack your rental property.
The LLC
They can only
component.
attack your S corp.
S corp.
Vice versa, if someone slips on the ice out front, they can only attack the building. They can't attack your business. So that's why we like that little separation there.
That is nice.
But again, just real estate,
Mhm.
no self-employment tax, operating entity, payroll tax for just the wages.
Perfect. Well, awesome. That's actually that covers this completely. Is there anything else that you feel like you really want to cover? Like, Mark, we definitely left this part out.
Now, I definitely I do think that the last point is one of the strongest. Is LLCs are really made for property ownership, and S corps are made for operating entities.
All right, perfect. Well, thank you, Pierre. Thank you all for watching.
You have been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you hear, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.